All right, welcome founders to this one-on-one mentorship explainer. I'm honestly so thrilled you're here today because we're going to set the stage for completely demystifying the actual financial mechanics of your business. Look, as a founder, you're wearing a dozen different hats, right? You're the visionary, the head marketer, and let's be real, occasionally the janitor. But today we're going to focus on the one hat that literally keeps the lights on. We're going to build your essential toolkit for keeping your startup alive, healthy, and really growing. Okay, let's kick things off with a quick, slightly uncomfortable question. What if your business was making sales every single day, but you are still losing money without even realizing it? I know, it sounds completely surprising, maybe even impossible. But as a mentor, I see this happen way more often than you'd think. The reason is usually pretty simple, but it can absolutely be fatal. Founders just don't fully understand their underlying numbers. Making sales can actually be a really dangerous illusion of success if you aren't tracking what's happening right there beneath the surface. So here's our roadmap for today's explainer. We'll cover the language of business, dive into the income statement, talk about why cash is king, look at your financial snapshot, compare cash versus accrual methods, and finally, wrap up with making smarter startup decisions. Let's jump right into section 1, the language of business. Listen, we need to completely shift your mindset right now. We've got to strip away this fear that business finance is just boring, tax compliance, or, a bunch of really complicated math. I always tell my founders you absolutely do not need to be a CPA or some math genius to be successful here. Accounting is simply the story of your business told in numbers. That's it. It's the system we use to track, organize, and really understand your financial information. It answers the fundamental questions you literally have to know, like, is my business actually profitable? Where exactly is my money coming from and where is it going? And most importantly, can I afford to grow, hire new people, or jump on new opportunities? Moving on to section 2, the income statement, which you'll also hear called the profit and loss statement. The core concept here is beautifully simple. Your income statement essentially contrasts two main things, revenue and expenses. Revenue is just the money coming into your business from your sales and your operations. Expenses, on the other hand, represent the money going out, your costs to just keep things running. This document basically establishes the day-to-day score of your business by clearly contrasting these two flows of money. And the crucial formula here couldn't be simpler. Revenue minus expenses equals profit. Profit, or loss for that matter, is simply what remains after all your expenses have been paid. Simple, right? But man, a massive mistake I see first-time founders make all the time is confusing top-line revenue with bottom-line profit. Revenue is the total amount of money your business earns. But if you don't properly track those expenses, or, if you just hide from your own spreadsheets out of fear, you might look at that high revenue and think your business is crushing it, when it's actually really, really not. And that leads us right into a massive beginner trap that catches so many promising startups. Profit is absolutely not the same as cash. Profit is what remains on paper after you've done the math. But cash is the actual, tangible, real money sitting in your bank account ready to pay your bills. A business can show a fantastic profit on paper while simultaneously struggling and totally failing to actually pay its salaries or even cover the rent. Which brings us to section 3, why cash is king. Let's talk about the cash flow statement. Think of the cash flow statement as the absolute oxygen of your startup. It tracks the actual movement of money in and out of your business. And we usually divide this into 3 buckets. First, operating activities. So this is the cash moving around your day-to-day business operations, like paying for server space or all those SaaS subscriptions. Second, investing activities. This is cash used for purchasing bigger things, like maybe new laptops for your dev team. And third, financing activities. This is the cash from bank loans, or maybe that seed money you just raised from investors. Tracking these exact categories helps you answer the really critical, immediate questions like, hey, do I have enough cash to actually pay my team this Friday? Or are my customers actually paying me on time? There's a very real reason we always say cash is king. Listen to me carefully here. A lot of startups don't fail because they built a bad product, or even because they aren't profitable on paper. They fail simply because they run out of cash. Without that oxygen, I don't care how great your product is or how much you spent on that fancy office ping pong table, the startup dies. You have to keep the oxygen flowing. Section 4, your financial snapshot. Enter the balance sheet. Okay, this introduces the third foundational statement you really need to master. A balance sheet provides a vital health check at one specific frozen moment in time. Think of it like a giant scale based on a very fundamental equation. On one side, you have your assets. So that's everything your business owns, like your cash, your inventory, the equipment. On the flip side, you have your liabilities, which is what your business owes to other people, like bank loans, unpaid vendor bills, taxes. The difference between those two sides, that's your equity. By looking at this single snapshot, you instantly grasp the overall financial strength and leverage of your entire company. Now, Section 5, Cash versus Accrual Accounting Methods. As your startup begins to really scale and grow, you're going to have to make a strategic choice on how you actually record all these transactions we've been talking about. Basically, there are two main methods. The first is cash accounting. With this one, transactions are recorded only when the money actually changes hands. It's beautifully simple, it's super easy to manage, and that makes it really popular among early-stage small businesses. But on the other side, we have accrual accounting. Now here, revenue is recorded when it's earned and expenses are recorded when they occur, even if the actual payment hasn't hit your bank account yet. So while it's slightly more complex, accrual accounting gives you a much more accurate picture of your business's long-term performance. I actually once mentored a SaaS founder who thought they were incredibly rich because of this massive wave of annual upfront payments, which were all recorded as cash. But because they weren't using the accrual method, they totally forgot to account for the monthly server costs they'd need to actually deliver that software over the next year. It genuinely almost broke them. That right there is exactly why accrual is used by almost all growing companies.
And finally, Section 6, Making Smarter Startup Decisions.
Let's bring all of this together and see how learning this language of business translates directly into actionable power for you as a founder. Remember, accurate accounting is so much more than just some annoying chore for tax season. It's a remarkably powerful tool. When you understand your numbers, you stop guessing and you start knowing. You can look at your statements and confidently answer major strategic questions. Should I increase my prices? Can I actually afford to hire those 2 new engineers next quarter? Out of all my offerings, which specific products are actually the most profitable? And where exactly can I afford to trim costs without hurting my operations? You stop relying on gut feelings and you start making definitive decisions backed by hard data. Which leaves us with this final, truly provocative thought. Are you ready to stop guessing and finally take control of your startup's future? Because the reality is, the more you understand your finances, the more control you'll have over your destiny. Accounting isn't something to hide from. It's literally your ultimate lever for building a successful business. You simply need to grasp the basics we cover today, keep accurate records, and review them regularly. Thank you so much for joining me for this mentorship explainer. Keep learning, keep building, and go take control of your numbers.